The most important part of the strategy or technique or process is that we have to find a zone of which to trade. So we can't just trade the M's and W patterns on any time frame and anywhere. So we need to identify the zone first on a higher time frame, then drop down to the 15-minute trigger chart. So in this case, we see a trend going up. We have 1, 2, 3, 4, 5 legs moving up into a nice little resistance area, and it breaks through the resistance. So we can start looking for one of our entries. So let's see what happens. This is the highest point that price has ever gone. So we can take our Fibonacci tool, pull that one down. Let's see what happens. We have prices going further down. So what we need is to take our Fibonacci tool and come slightly down there. So here we can see already we might have a 78.6 entry if we don't close above that area. Let's see. And prices goes even further. It closes above the 123.6. So that one is also now nullified. But what we still have is a 161.8. This is our limit when it comes to qualifying our M's with the strategy. So as long as prices doesn't close above the 161.8, we are good to go short as soon as prices gets below that area there. But then in this case, we can also see the 36 EMA, so we might as well move our sell stop order below that area. Let's have a look at the actual M pattern. So we have prices going up. This is where we start our Fibonacci tool from the highest point there. And then it comes all the way down to the midpoint there. And then the follow through goes all the way up to 78.6. And then it passes that one, closes above, it goes to the 123.6, closes above that area. And then finally it comes all the way up to the 161.8. And that's our limit. So if prices comes down and triggers our sell stop order, then that is what we are looking for in this scenario. Let's see what happens further. Prices goes up. So we are not triggered in yet. And if we notice where our 36 EMA is now, it's our trend following EMA, we can now ignore the 36, because if we have our entries just below the midpoint of the M, we would have broken our 36 EMA anyway. So let me get rid of this line for us. And this one and that one. So now we know how it looks. So we are looking for prices to enter below that area. A few pips below the midpoint of the M. And our stop losses are going to be, above the area there. So we could move our stop loss above that area. And then let's see when we get triggered in, or if we get triggered in. So we are looking for, there we go. So we are triggered in now. And let's see. Perfect.